Well, good afternoon. Welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Samantha Loring. Coming up on this episode, the cover story this week takes a look at expat billionaires. In our trade of the week, we also take a look at Ilovo versus Tongaat Hewlett, and the kind of Finweek view right now is buy Ilovo, sell Tongaat Hewlett. We'll take a look at why that is. In personal finance, we'll be discussing insuring your holiday home. Of course, this is close to many with the fires that took place in St. Francis over the weekend. We've also had some other natural disasters, the hail here in Gauteng, of course. So we'll take a look at the importance of insurance for these, these unpredictable weather-related disasters and the precarious new world of informal jobs. So we'll take a look at that and we'll delve into that topic in our management part of the show. And last but not least, how far can the saying "thank you" get you? And that, of course, in the entrepreneurship section at the end of the show. That all coming up in the next hour. Of course, you can get in touch with us with any comments or feedback to Money Matters at abn360.com. Well, Africa has joined the global economy and we're rolling out a high number of high-profile technology entrepreneurs, that including Jason Njoku. Now, unlike its Silicon Valley counterparts, African technology entrepreneurs have to approach building their businesses with a different market in mind. Now, Finweek spoke to some of the local entrepreneurs trying to make it big on the global scene. Joining me now to take a look at this, Garth Tennyson and Simona Levitt, both from Finweek, and Jaco van Wyk, MD of Snapple. Thank you for joining us today. So Garth, let's spend a little bit of time just looking at Jason Njoku's story and why you chose to have this as the cover story this week. I mean, what kind of a theme were you trying to get at here?
Well, I guess it's a great lesson for any African tech entrepreneur. Basically, what you've got is Jason Njoku, a product himself of the African diaspora, grows up in London watching his mom and her friends watch Nollywood movies, which is the term used to describe Nigeria's movie industry. And he eventually comes up with a scheme to put these videos on YouTube. And eventually monetizes it, and today he's a millionaire. Mm-hmm.
And of course, you know, just looking at Nollywood right now, it's the world's second largest movie industry, that's after Bollywood. So Hollywood only coming in third place there. Nollywood movies to Nigeria, very much what Starbucks is to States, is one of the comments there. What are your thoughts on kind of the key lessons, I suppose, that you might be able to take from Jason's story?
I think there's a lot of lessons that you can take from his story. Probably the most important is that he understands his customer. He's understood the emotional connection they have, and he's really tapped into that and provided it in a way that is accessible to them. So I think that's one of the key lessons. The other thing that I found very interesting is that he doesn't do any advertising, and I think we forget very often when we're starting up companies that you think of the full marketing plan, but actually a lot of power comes through word of mouth and just actually the community itself talking about your product. Mm-hmm.
Let's bring you into the conversation, Jaco, yes, because I'm not going to speak, broadly about Jason's story. Of course, he is a famous entrepreneur that has made it globally, and a multi-million-dollar business. But tell us about the beginnings of Snapple, because you saw a gap in the market, I assume, and you're filling that.
Yes, we actually saw a gap in the South African market for an online billing system, a software as a service solution. And we decided to start that business in 2009. We called it Snapple. It's focused on businesses who just do recurring or subscription billing. And we automate credit card collections and debit order collections for these businesses. And we came to a stage where we decided, look, we are relatively successful in South Africa, which is a key thing for any entrepreneur, is first be successful in your own market before venturing into markets that you don't know anything about. Mm-hmm. And we decided to launch globally. We saw a need for the product, and that's where we got started. On the 1st of March 2010, we launched internationally.
And tell us about your experiences of moving into new markets. What are the things that you are learning now along the way that you didn't know at the start?
Look, we learned many hard lessons. There's many things you don't take into consideration. And funnily enough, those are the most basic things, such as time zones. We are a business-to-business solution, so obviously time zones play a big role in supporting businesses overseas. Another issue was language. We all assume that everybody speaks English. And that's not the case. The majority of people you deal with internationally have a basic understanding of English, but it might not even be the same understanding as we might have in South Africa. That's why we're focusing more on the British-speaking English countries. And then also, I mean, there are many other factors that play a role, but you can't just approach the international market thinking you're going to throw money at marketing. Because at the end of the day, building relationships and networking and communicating with your fellow person abroad is the easiest way to actually build trust in your business. And I think that's what entrepreneurs should focus on.
How much of an issue was broadband penetration and the lack of internet infrastructure in South Africa for you?
It's a big problem for us. I mean, as a South African business and starting out in South Africa, we have all our infrastructure internationally. And that's a testament to how lacking infrastructure is in South Africa.
Is that a lot more costly for you?
Well, it's a lot cheaper for us to have it internationally.
Well, I suppose you have to take that decision, but ultimately it would be ideal to have it here.
But of course, yes, there's performance issues with regards to our South African businesses making use of our services. So, I mean, broadband is I'd say the most debilitating problem we have in South Africa with regards to online business.
Just on that, and if I can bring the cover story back in here, I think one of the lessons to take out of the story is, first of all, Jason Njorku, obviously he's got Nigerian roots, but he's actually a guy from London. If you listen to him talk, he's got quite a thick South London accent. And he's from a market where there's very sophisticated internet infrastructure in place. And 90% of his clientele are situated outside of Africa. Mm-hmm. So he's taking an African product and he's actually exporting it to the rest of the world. He's tapping into that $40 billion in Africa diaspora money that gets sent back to the continent every year. And his biggest markets are the US, Canada, the UK, Italy, and Germany, apparently. So again, it reinforces what Yaku was saying, in that most of his market is actually outside of the continent, and one of the barriers, I guess, is the fact that there isn't deep enough broadband penetration on the African continent.
Mm-hmm. And I suppose, if you just look at the article, he really is tapping into the cultural ties that Nigerians who live offshore have with Nigeria, and of course the connection they have with Nollywood films. And that again, another lesson there, being able to look at perhaps if you are operating outside of your market, look at what people like yourself are longing for when it comes to your market back home.
I think the other interesting thing is, why did it take a guy from London to come up with this idea? I don't mean it in any way as a criticism of him. It's a great example. But again, I think a few weeks ago we did a show on a cover story done by Finweek, where most of the CEOs we profiled were actually, they had some overseas connection. They were either born there or they were the children of immigrants, etc. And once again, it's someone from the outside coming into Africa. He's now based in Lagos, and sort of tapping into the creative energy in Africa.
Mm-hmm. Let's talk about Africa and where that fits into Snapbill's future. Does it fit into the future, or is broadband the big issue right now?
Yes, of course, Africa fits into Snapbill's future. I mean, to be honest, South Africa probably has one of the poorest broadband infrastructures in the whole of Africa. So you have to take that into consideration as well. Our cost per megabyte in South Africa is more expensive than anywhere else in Africa.
Give us examples of some of the key countries right now that are doing a lot better than South Africa.
So Ghana, Nigeria, especially Nigeria. Kenya is also doing very well. We'd like to take our product into these countries, but there's obviously other factors to consider, such as currencies, the volatility of the exchange rate. I mean, if we're dealing with businesses in these economies, we need to take that into account, and that's where we've been burnt in the past, especially with the US market and trying to sell in US dollar and bringing this back into South Africa. It's a very expensive exercise.
Mm-hmm. Out of interest, what is the perception in foreign countries of South African entrepreneurs and South African businesses?
Well, from the time I spent in Silicon Valley and speaking to especially US venture capitalists and entrepreneurs in the US, they have a very positive view on South African startup businesses and entrepreneurs. They think we've got what it takes to make it globally, and they're also very willing to invest in us.
Well, that's a good thing. Are they investing from your experience? Are you seeing is it mainly technology startups?
We've seen many technology startups getting investment, but majority of the investment coming from overseas. There's a gap in South Africa, I believe, with regards to investors investing in businesses and then also having the skills to back up that investment and actually help the business take their product to a global market, you know. Just giving money or throwing money at a business is not a solution to getting it started and getting it going in the global economy.
And of course you need that expertise and I suppose lessons along the way.
Yes.
Thank you so much for joining us today, Jaco Finweek, MD of Snapple, and of course you can get that cover story from Finweek, Africa's Expat Billions, to hopefully inspire you when it comes to your entrepreneurial ambitions. It is a Global Entrepreneurship Week this week. Time now for a quick look at the Finweek Trade of the Week. Well, this week we're looking at Ilovo versus Tongaat Hewlett. So, I mean, it's an interesting one, of course, because we've seen Ilovo's results coming out this week. Fantastic numbers, 30% up, very much related to the weather. So I don't really know how you kind of take a view on one versus the other, but you're basically saying buy Ilovo, sell Tongaat. Why is that?
Yeah, I mean, I prefer to call it the idea of the week from my part, because I don't trade like Mr. Ashton does. He's got money in the market. But basically what happened is Tongaat Hewlett got issued an ultimatum by the Zim government saying you've got 14 days to come up with a plan to cede a controlling stake to black investors in Zimbabwe. And I think Zim accounts for about 19% of their revenue, so it's a significant chunk that suddenly they won't own anymore if that comes to pass. And on the other side, you still actually want some exposure to the sugar market. Now there's this global glut of sugar supply, which has pushed prices down dramatically. But there are a few sort of technicalities that mean you might still want exposure to an African sugar producer. One of them is that 70% of the sugar that's produced in any country gets sold locally or domestically, and often there's import tariffs to protect those domestic prices, so they're less exposed to cheap imports from, say, Brazil, particularly in the non-coastal areas of Africa. Ilovo's got operations in Malawi, Mozambique, Tanzania, Zambia.
Yeah.
And the other interesting thing is that those less developed African countries have preferential access to markets like the EU. So they can still produce in low-cost zones, but then export to areas where they're relatively high retail prices for sugar. So basically, in a nutshell, if you want exposure to that type of investment, buy Ilovo, sell Tongaat Hewlett.
Yeah, and let's not forget, of course, in Africa you've got a growing middle class, high disposable incomes, and basically people being able to spend more on the type of products that are made from sugar. So there's also this trend on a long-term basis of growing demand for sugar-based products. And then on the other side of the scale, you've got opportunities when it comes to power generation. You've got opportunities when it comes to distilleries and the alcoholic market. So it plays into a huge amount of products that feed the consumer market.
And potential ethanol production is another one. And at the same time, per capita sugar consumption in Africa is actually a lot lower than some of the other markets. I saw a scary figure. Apparently in Brazil it's over 60 kilograms per person per year. I'm not sure how they do that, but there's a lot of catching up to do.
Playing devil's advocate though, I mean, Tongaat Hewlett has said, even though they've got this ultimatum, they're committed to Zimbabwe. They see huge opportunities there, perhaps, just sending out a signal to the Zimbabwean government. But they have said that, they feel that Zimbabwe is a long-term play for them.
Well, the cynical side in me would say they have to say that, but certainly longer term, I guess it would be in their interest to stay there. I'm not by any means saying, it's a disaster for them long term. I'm sure they'll find a way around it, but short term, if you're looking for an opportunity, maybe steering clear of Tongaat Hewlett and favouring Ilovo is a better bet.
I suppose also in a game like this where scale plays into it, with Ilovo being the largest producer of sugar in Africa, that's also another kind of, positive on their side.
Talking of scale, the other thing is Ilovo's got operations in countries with bigger populations. Malawi, I think, has got 16 million people. Tanzania, Zambia, all quite sizable populations, whereas Namibia, Botswana got 1 million each. And that's more where Tongaat Hewlett plays.
Certainly interesting dynamics, but thank you for that. That's our trade of the week. Go buy Ilovo, Tongaat Hewlett shorted, of course on a short-term basis, but take what you want from that conversation. We're heading into a short break. More Finweek Money Matters straight after this. Welcome back. Well, the recent fire which devastated St. Francis Bay has meant that a lot of investors have seen their investments go up in smoke, so to say. Insuring a holiday home is often a nice to do rather than front of mind for a lot of investors, but getting it wrong can be very expensive, as the 80 or so people who lived in St. Francis and lost their homes have found out. Joining us now to discuss this further, Peter Todd, CEO of Mutual and Federal. Peter, thank you for joining us. So that's the number I've seen. 80 or so houses were damaged. From an industry point of view, do we know the stats right now to what extent the damage is from St. Francis?
Yeah, we don't have the detailed number as yet. We're still trying to collate that as an industry. The last number we heard was 76 homes gutted. So if you apply an average to that in terms of the home and contents, we could probably get to about 400 million just from that fire.
And of course, each insurer would be affected differently. Have you had claims coming in?
We have. We've had 3 claims to date, one of which being a complex, so there are more units in that. So I think relatively we've got off pretty lightly in terms of that particular incident. Yeah.
I mean, obviously the relevance of this discussion now is to look at the value of insurance when there are disasters that you can't, of course, anticipate. I mean, 80% of the homes here were holiday homes. So when it comes to holiday homes, what are the trends you're seeing in South Africa? Do people, are you able to say whether people are insuring their second home, so to say?
Yeah, I think it's, hopefully people are, because clearly you can see from this incident it's a major exposure. I think one has to be careful as a consumer of insurance in terms of holiday homes, because it is a very different risk profile. So, the way insurers will look at a holiday home will require you to make certain disclosures, which could impact at the time of a claim as to whether that claim is valid or not. So, people tend to use holiday homes differently. So, for example, you would be renting it out, possibly. What are the implications of that from an insurance perspective? Or it could be standing open for most of the year. And that obviously also has a different implication from an insurance perspective, because it increases the risk. Because if you would have, just as an example, if you had a geyser burst, if it's a home you're living in, the geyser's burst. If it's in your holiday home, by the time we discover it, it could have caused much greater damage than would be the case if somebody was occupying the home. So it does have an implication from a pricing perspective, and therefore it is a requirement to disclose those kind of facts, but often people don't, unfortunately, think of that.
I'm guessing there's a number of other elements they don't think about in terms of the risk exposure of their holiday home. So, for example, the fact that they might have people on the premises on holiday when they're renting it out.
Yeah.
In the event that there's an event that prevents him from gaining rental income, that's another event.
Yeah.
Can you talk a little bit more about those elements?
Yeah, so again, to have the right liability insurance is critical, because if you've got tenants in there and somebody's injured, so I'm not aware of any injuries as a result of this fire, but potentially somebody could be in a house, and if there wasn't adequate fire escapes or fire protection mechanism, etc., there could be a liability exposure to the owner of the house who's renting it out. So you would have to make sure that under your policy you've got adequate liability cover to protect you from that. So it's definitely a consideration.
If I can ask just a sort of silly homeowners type question, what is the difference in premium, if you can put it in percentage terms, if you had, say, 2 identical homes and one had a tile roof and one had a thatch roof? How much more of an issue is it for an insurer?
Yeah, it's a hard question to answer, because each insurer has got a different sort of risk appetite for that. So, you could go to an insurer who specializes, in thatch and have a big enough spread of thatch risk, and therefore would give you a more competitive premium. Okay. But there is certainly a significant premium for thatch, and I think now if you're going to be in St. Francis and renewing your thatch house, you're going to be expected to pay more.
I mean, just looking at the St. Francis situation, one might say, it was a disaster waiting to happen. Unfortunately, it did happen, but, you've got a whole town built with thatch roofs, as I was saying. What's your thoughts on that?
Well, I would hope that the people who rebuild their homes now use slate and not thatch, because that is the alternative now in St. Francis. Yeah. And it's one of those things, it will never happen to me. And then the day it happens, everyone says, well, it's quite obvious. Why did nobody think of that? So, it is a classic example of an accumulation of risk. And so, therefore, I think now insurers will have to model that into their pricing when they look at St. Francis Bay specifically for insurance renewals.
Yeah, there are two parts of insurance though. If we had to break down
Yes.
insuring a house, I mean, you don't say a holiday home, but, a house is a house. So there's the structural cover, and then you've got covering the content. So to break down how you look at that.
Yeah. So, well, exactly. So there's cover for the house itself, and then the contents within the house. Now, you can have a comprehensive policy that will cover both. But often those are separately insured. So particularly where you've got a mortgage on a property. So the bank will try and sell you an insurance policy with the mortgage, which will just cover the house and not the contents. And if you then pay back your mortgage, often, unfortunately, insureds forget to then go and buy the separate insurance for their house. So they might be under the impression that their house is still covered, but it's actually only the contents. And sometimes it's the other way around. They think that, well, the house cover includes the contents, which is not the case. So, I think insurance, the need for advice, I think, is very, very important in insurance.
In terms of a complex, I mean, that's obviously a very different type of insurance structure. What do people need to be aware of there? Because in my understanding, a lot of the decisions are actually taken by the body corporate
Yes.
in terms of how much is covered. What is your advice for viewers around that?
Yeah, I think you would want to be satisfied that the body corporate is adequately covered. So I think you should be asking the body corporate, in terms of their insurance for the building. And again, the body corporate would cover the building, but not your contents. So again, just to be sure that you understand the difference between the building cover and the contents cover, because the obligation to insure the contents would rest with you.
So of course, just let's reiterate that point around getting insurance with your mortgage, because is that what banks generally in South Africa do, or is just some banks?
There's no bank that I'm aware of that doesn't try and sell you an insurance policy.
Yeah.
I've got a caution tale on that though, if anyone's listening. I recently bought a home, and I discovered to my horror the other day, after my gate was struck by lightning, that my circuit board had been fried. And when I phoned up to find out if it was covered by insurance, I subsequently found out that although the financier had passed on the documents to the insurance company who I won't name, they actually hadn't bothered to begin deducting any premiums from me. So in other words, it wasn't insured. So yeah, if you do get a mortgage and the bank does ask you to fill out the forms, maybe pick up the phone and phone the insurance company, make sure they've actually activated it.
Yeah, absolutely.
And
there we go. Follow up.
In terms of high-risk areas in South Africa for disasters, are there any particular hotspots in terms of fires and the flooding?
Well, I guess the floods. I mean, we saw recently in Port Alfred the flooding there, again a holiday destination. So I guess a lot of people have had their holiday plans scuppered. But the Vaal River as well. We've had a number of years where that's flooded. So there are particular hotspots. We are aware of that. The Gauteng region, because of the high concentration of values. And the risk of hail. So again, we've seen that in the last couple of weeks, significant damage from hail.
What about if for many people who have a holiday home, they actually use it to generate income? Can you insure this income? How much more costly is that? What are the considerations you need to take into account?
You can, and I think that's a pitfall, because if you look at a normal personal insurance policy, it wouldn't cover that. So you'd have to look towards a commercial policy to cover that aspect. So.
Can it be a top-up in your insurance, though, if you have kind of normal?
It could possibly, but more than likely it would fall under a commercial policy, because you're using it for commercial purposes. So the cover there would be slightly different. So it is insurable, I think, is the answer to that. Again, it's about getting the right advice. Are you insuring it as a business? I mean, are you renting it, as a business, or is it just occasionally you let it out to people, and what are the implications of that? And you'd have to weigh that up against the cost of the insurance and decide whether it's worth your while or not. So seek advice would be my advice.
And from the perspective of an insurer, what are the impacts of a huge disaster like this, and how do you look to mitigate?
Yeah, so all reinsurers will buy reinsurance protection. So we insure ourselves. That's what reinsurance is all about. And we employ a lot of clever actuaries, and they do modelling around these potential catastrophe events to try and work out what is the right level of protection to buy, because obviously there's a premium to pay for that. So again, it depends on the strength of the insurance company's balance sheet as to what that risk appetite is. But we will model particular risk scenarios And whether it's a 1 in 100-year event, a 1 in 10-year event, etc., you know, it will have different implication from the reinsurance cost.
I mean, I know that whenever we have kind of weather-related discussions or climate change-related discussions, there's always someone from the insurance industry